With us to speak about the American markets and the dollar, we have Mr. Bahavik Mehta. Mr. Mehta, I'm Abdullah. How are you? I'm happy to have you. Allow me to ask you, please. Allow me to ask you about your opinion about Goldman Sachs expectations for S&P 500. Do you think it will really reach 5,200?
Hello, Abdullah. Thank you for having me on the show. So, what we are seeing currently with US markets is the classical case of, I would say, over heightened optimism that is prevailing among between the markets sentiment as well as the Wall Street bankers. Now, we all know that majority of the earnings are being supported by tech companies led by the handful of top 10 to 20 names. And even a index like a small cap index, which typically used to be dominated by industrial and energy companies, we are suddenly seeing the rise of small cap tech stocks as well as healthcare names. So I believe the market euphoria is at a very different level at this point of time. What we are seeing is optimistic and bullish forecast as far as the index levels are concerned, and similar is the scenario as far as the interest rate cuts are also expected. So I feel markets are in a way running ahead of themselves at this point of time.
I will focus on the dollar, and if it is calm and going down now as a signal that everyone is expecting tomorrow's minutes of the Fed.
What's happening with the dollar is it's a classical case of the currency being supported by a very strong domestic economy. So if we rewind back to last 2 or 3 month period, let's say December 2023, the expectation was very strong that US economy is going to face a very big recession wave, the labor wages are going to drop. But we recently saw the labor wage data, we saw the jobs number, we saw the inflation data, which doesn't typically point to a scenario where US economy might be entering recession or even, let's say, soft landing. So dollar is strongly being supported by the macro factors that is being happening in the US economy, as well as overall weakness that's seen in the European zone.
If we want to set the ranges expected for the dollar based on those factors and based on the sentiment, the shaky sentiments about reducing the interest rates, what are the ranges expected for the dollar, up or down, this year?
Right. So primarily,
taking into consideration the factors. Yes.
yes. So if you're looking at the main dollar index range, we see a strong support in the range of 102.5 to 103. Now, again, if you talk about dollar index, we are talking about the biggest component, that is the Euro USD, which still constitutes around 45 to 50% plus of the entire weight. So, Euro USD strong support again seen at 1.045 to 1.05 zone. But the way Euro USD has been trading over the last 6 to 8 months, there's a strong resistance that's being seen in the 1.10 to 1.13 zone. So that's a big hurdle, I would say, for the forex traders to cross. That is one of the key levels that we're looking at.
What about the winner? Who the gold is winning, and there is an increased demand on safe havens because of the tensions. So, do you think that gold is benefiting a lot, and what are the price range for it?
Gold has benefited, Abdullah, from the increased central bank buying that has happened over the last year. But so far, the cues, the different, you would say, the anecdotal news that we are getting, we do not see big amount of central bank gold buying this year. So we at Century Financial Research would primarily feel that a bigger gain in dollar or even dollar staying at the current levels is going to be a big negative driver for gold. Because what has happened with gold is the triple top levels near 2100 levels, 2150 levels, that are coming as increasingly very difficult for the traders to break. So a proper and sustained break above these levels will change narrative to a strong gold as far as that thing is concerned.
It is up to records now since 13th of February.
Yes.
It is 2018 dollars now, which is 13% up. Thank you, Mr. Mehta. Thank you very much. See you soon.
Thank you.